Hey everyone, as we kicked off the new year, I've focused my videos on the three forces that will shape the commercial real estate investment landscape in the coming year. I started off with the job creation outlook for 2026, and as I shared last week, the second was interest rates together with debt capital availability. This week, I'll focus on the third force that will shape the commercial real estate landscape, the availability and deployment of equity capital. Now, the bulk of the commercial real estate acquisitions are driven by private investors. This group includes high net worth individuals, family offices, and private investment firms that draw capital from private sources rather than public markets. That includes most syndicators and smaller equity funds. Collectively, private investors are the most prolific commercial real estate buyers. When you measure by dollar volume, private investors have driven 47% of the commercial real estate purchases, north of $2.5 million since 2010. Since 2019, private investors placed about 55% of the capital, and in the first 3 quarters of 2025, they drove 59% of the dollar volume. In contrast, institutional capital comprises an average of 26% of the total dollar volume since 2010 and just 21% of the acquisitions in the first 3 quarters of 2025. In 2021 and much of 2022, when interest rates were exceptionally low, both groups were aggressive buyers. If you look at how much capital institutions raised for commercial real estate, those were the peak years. The institutions brought in more than $160 billion of real estate targeted capital in each of those years. But as interest rates started to go up in 2022, and as the market started to hit some bumps, investors' ability to raise capital declined. In 2023, the institutions raised about $110 billion, and in 2024, they only brought in about $91 billion of real estate targeted capital. At the same time, the CRE Total Returns Index, which is closely monitored by institutional investors as a key indicator, fell into negative territory and only began to recover in 2024. So, institutional capital basically dried up, and because the CRE returns on commercial real estate were running negative, the institutions really weren't in a hurry to deploy capital. Private investors also backed off in those years, especially the syndicators and equity funds. Private investor buying activity fell from the peak in 2021 to the trough in 2023. But last year, the market began to turn. If you look at the deal count, the drop off from the peak years of 2021 and 22 is dramatic. The total transaction count in 2023 was down by 48% compared to 2021. Things got a little better in 2024, with the deal count rising by 3.3% year over year. And if you look at the first 3 quarters of 2025, the most recent data available, and compare it to the first 3 quarters of 2024, the deal flow of commercial real estate properties over $2.5 million is up by 17%. Now, the question is whether the deal flow will continue to rise in 2026. Private investors will likely be increasingly active this year. Although many syndicators and equity funds still face capital raising headwinds, the lower interest rate climate, together with higher cap rates and the opportunity to generate positive leverage on debt, should entice more activity. High net worth private investors and family office money will also capitalize on the positive leverage opportunities. But I think the big move in 2026 will come from the institutions. Last year, the institutions raised more than $121 billion. That's up by about 33% from their 2024 total. And with the CRE Total Returns Index back in positive territory, more institutions will have the confidence to re-engage the market. So the third force shaping commercial real estate investment in 2026, the availability and deployment of equity capital, is looking positive. The increasing volume of capital raised by institutions, together with the positive CRE Returns Index, in conjunction with the potential for positive leverage suggests that investment activity in commercial real estate should continue to gain momentum. But as always, there are a variety of variables, including unpredictable federal policies, geopolitical events, and the performance of financial markets that could complicate the outlook, which is why investors always need to keep their eyes on the horizon.